Welcome everyone to the Kendall Report, where I share my 43 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight I'm going to be discussing a couple key elements, which will be the GDP numbers and the PCE numbers. I believe these are going to have a huge impact on the markets as we come into the end of the week. Let's get into tonight's video. Well, folks, it feels good to be back, so let's get right into tonight's video. There's a number of things going on this week. It's going to be a very huge week as we have a lot of earnings coming out, actually 520 earnings reports coming out. We also have the PCE numbers expected to be flat. And one of the things I want to talk to you about tonight is that I actually think the inflation story is an old story. What we're seeing here is that inflation is flattening out and starting to come back in. Is it at the Fed's target level of 2%? No. And it probably won't be there for a long time. But I think this story is very quickly falling into the background. And I think what we'll see going forward is a continuation of the patterns that have been unfolding in the markets. Economics continue to look good. In fact, let me go ahead and talk about some of the economic reports that are coming out this week, other than the PCI. We also have GDP expected to show a 2.8% gain. The last report, it was at 3.2%. So that's flattening out a little bit, but still a really good number. It's really hard to be talking about a recession and all these negative reports. It's interesting as I look at all the economics coming out. If you look on the internet, Twitter, what have you, just everybody's talking about these are the worst metrics that we've seen for years and years. Well, it's obvious that these are probably the low of these patterns, not the beginning of something larger. One of my old cliches I used to have, it's hard to commit suicide from a basement window. Otherwise, when the markets are down in the dumps, it's hard for them to really get much worse. As we look back at 2022, that was the year that was a disaster, but the markets recovered pretty substantially in the fourth quarter. Even though they finished negative on the year, there was a substantial recovery. The other things coming out this week, to go back into the economics that are coming out, we're looking at GDP, as I mentioned, at 2.8. The deflator is expected to come at 3.3. It was up over 5% on the last report. So like I said, inflation, it's the old story, not the new story. And I don't think it's going to be driving a lot of things from that standpoint. The other report that's big that I mentioned is the PCE numbers. They're expected to be flat, maybe a negative 0.1. Year over year, we're looking at a 5.5% gain. So a long ways from the 2% that the Fed's looking at. But we're definitely just looking at the markets continuing to flatten out. And I just don't think this is a story. Many of these reports, GDP, durable goods expected to be up 2.5, claims up 200, which is a little bit of an uptick, but not much. Continuing claims at 1.647. So employment continues to stay good. And then on Friday, that's when the PCE prices come out. We also on Friday have the consumer consensus numbers coming out. I don't think they'll have any real impact. Other than that, we have finally pending home sales. One of the other things I need to talk to you about tonight is we have a ton of earnings, and we have 520 of them. On Monday, we've definitely got mostly regional banks, and there's a mixture of things, but some of the smaller companies. On Tuesday, we have Microsoft, J&G, lots of big companies reporting. So Tuesday's going to have a very interesting impact as we go forward. And then Wednesday's Tesla, AT&T, IBM. There's a ton coming out on Wednesday. Thursday is Visa, MasterCard, regional banks again, also some pharmaceuticals, just an absolute plethora of all kinds of things that are going to be coming out. So on Friday, we have about 73 reports coming out as well. That totals 520 total reports coming out this week. As we go through this week, I expect the volatility to stay high. I continue to expect to see the market stay in a positive tone. Here in just a minute, I'll go through the Wavetech database and get you updated on where we stand there. The final mention I want to make is there's a lot of talk starting to come in with the debt ceiling. This is a non-event. This is the same thing we've seen. I don't expect that the Republicans are going to push this ball too far, but we've got plenty of time on that clock. Maybe it becomes more material, but for right now, it's just noise. Let's go ahead and get into the Wavetech database. Wavetech database continues to expand slightly. We're now at 45.57% bullish. The daily is remaining above 70%, but as we look at the number of buys and sells that came out on the weekly, 578 buys versus 199 sells. This is a positive rotation and continues to show a slight bullish tone even on the intermediates. Now we're at above the 42% on intermediate. As we go over to the daily, it's at 77.83% bullish. It has stayed quite high. I was expecting maybe a little bit of a pullback. We still could get one back to around 68%. But overall, we're seeing the metrics on the database continue to be very bullish as we look forward. Right now, the average profit on the daily optimized models right now are currently only 5.1%, and the standard deviation profits is as much as 40%. A typical average profit is about 11.24%. These trades usually stay on between 35 and 50 days. So the current duration right now is 18 days. So we're a little bit more than halfway, but what can happen sometimes we'll see a rotation, especially on the daily database. So I don't expect to see anything drastic happen here, and the intermediate database is still expanding as we're getting more traction as the weeks go by. And as long as we stay above 3750 S&P, we're likely to see some relative expansion in the database and a continuation of the pattern that we've been trading in for the last several weeks. As I go over the S&P, last Friday was a huge rally. We had the NASDAQ over 2% up on the session, and the S&P was up about 1.7%. For the week, however, the S&P finished down 0.7, NASDAQ down up 0.6, and the Russell minus 1%. But as we look at the hourly chart here on the S&P, you'll see the algos are suggesting we're going to stabilize here with the potential of the market. It looks like we could start to see a fade and potentially trade down to some support, which is currently at the 39.69, 39.56 level. Let's go over to TradeStation here and just take a look at the market grid so we can get a handle on exactly what the expectations are for. So looking at the grid for Monday, right now we've seen a high of 39.90, a low of 39.80. S1 is 39.71. That puts us toward that support on the hourly around 39.69. S2, 39.52. That's right into the support range for today on Monday. The resistance is 4,005, R2, 4,024. I think we continue to stay in a very choppy range here. As I showed you just a minute ago, let's go over to the daily algos to get an idea what those look like at this time. So let's take a look at the dailies. And the dailies are interesting because they're showing some downside here with new Fibonacci projections to the downside here with the minimum projection. That's the minimum here. That's a big number. I don't see that coming into play. In fact, when we see these kind of big drastic moves like that, that's usually not the next target down. The interesting thing about this pattern is that all of the moving averages are very close together right now. 10-period moving average, 39.70, 21, 39.14, 39.46, the 40, and 39.32. So the support that we saw late last week around 3900 to 39.30 should continue to hold in here. We could see some slight pullback, but most likely we're going to see more of a choppy range, and it doesn't look like we're going to get any follow through. We did get an RTX sell signal on Friday. So what we're seeing here played out right now is the sideways to down for at least a couple sessions. As we go to the weekly charts continue to suggest also that there's a possibility of a minor down over the next week or two, but I don't see it being material. I think we'll stay above the 200-week moving average, which is currently at 37.74. That's quite a ways down. I mentioned in the opening comments that as long as the market stays around or above the 37.50 level, then we're likely to see the database continue to expand. So just to tie together the database, when we see this type of configuration where we're still seeing traction coming in on the intermediate and the daily well over 70%, these are very bullish configurations from the database. So it's not just about looking at trend line or looking at the indexes, it's looking at the bigger picture right now. And it's quite a bit of traction in the intermediate database now, getting towards around 7,500 plus symbols. Folks, I apologize, but I thought I could get this thing all the way done tonight. I had quite a few difficulties getting the studio set up after it not running for over 5 weeks, so I'm a little bit delayed. So what I'm going to do here is a quick synopsis and walk through different markets, and it's going to be very brief here just to finish tonight's video. So first we'll look at the NASDAQ. NASDAQ is continuing to show a bottoming phase here, and it's very interesting. This is the weekly, and we're seeing still some upward targets here for as high as in the 13.2 level and beyond. Just going to click through to the dailies. I also have the Wavetech pivots up here. Looks like the general bias on the short term is going to remain positive. Support 11,500. The last right now, 11,664. Below that level, there is a pivot number right now at 11,212. If we broke below that, that would suggest lower prices. There's only about a 40% chance of that. Let's go ahead and take a quick look at the 10-year. Is continuing to be in an uptrend, but what we're looking at here is some key supports down at 343. That's where the 40-period moving average is. There's also Fibonacci support right now. That's at the 337 level. Extreme right at 3%. I don't see us getting to that level. However, the algos on a weekly basis are suggesting that we're going to lose more momentum and ultimately that we're going to stay under the 10-period moving average, which is currently at 370. So we're going to target this between 335 and 365 for the moment. Next, I'll cover gold, and this will be the final market for tonight. But we continue to see the weekly gold chart move much higher in the pattern. If you recall, about a month and a half ago, 2 months ago, I was talking about this amazing bullish pattern that was being signaled by the algos. They continue to show that the momentum is going to remain on the upside, but we should likely to see some consolidation, but gold should stay above the 1845 level. The key levels on the upside, just looking at the market grid here on a weekly basis, suggests that 1939 is going to be a key resistance level. We've already had a high of 1936. The next level above that is 1951. As I've been talking about for a number of months now, is that I do believe that gold will ultimately challenge the 2000 level and go much higher. I'm sorry for the abbreviated version tonight, folks. I will do my best to try to get this done a little earlier. It's been a tough comeback tonight. So thanks again for your patience, and I will talk to you tomorrow night.